Okay, good day traders. Welcome to today's episode of my weekly Forex Forcast. This is Onunaku Tochukwu speaking for Lazarus Capital. So, as you all know, I do this every weekend, Saturdays to be specific. On Saturdays are the days where I prepare my trade. I do my analysis and I prepare, I plan my trades on Saturday. Then, Monday to Fridays are strictly, coming to the market to see if I have my setup. If I do, I execute. If I don't, I shut down till the following day. So, and as you all know, my trading strategy, like I always tell us, is very simple and straightforward. Once I have identified the direction of the market on the higher time frame, I want price to pull back to my area of value. And when price comes to my area of value, I wait, for my market participants to come in and I join them. If the market is bullish, I'll be waiting for price to come to a support area. This area will be an area that market have tested in the past, an area that market have reacted in the past, and that is obvious. And I also want to confirm that this area is, in line with my Fibonacci 5061.8. Once market gets to this area and my market participants come in, I join them. Also, if the market is ranging, the market is in a range, I only want to participate at the supply or resistance area to go short, or at the demand or support area to go long. So, without wasting our time, let's just go right into the chart. We'll be starting as usual with the BTC USD. Like I told us, the BTC USD, I'm still bearish on the BTC USD. This is a 4-hour time frame. My analysis, and my executions are done on the 4-hour time frame. But if things are a bit not clear, I might move to the daily or the weekly time frame to see things, clearly. So this is a 4-hour time frame for the Bitcoin. Let's go to the daily time frame. So as you can see on the daily time frame, we can see that the markets have been trending to the upside. We can see that the market have been trending to the upside for long, and you can see the market have been trending to the upside. Sometimes, in the around November, we saw the market changing its character at this point. So since when the market broke out from this trend line, and there's also a key support area here. Since when the market broke out from this trend line and this support, that is when I became bearish on the Bitcoin. The Bitcoin have been bullish, but since price broke below this support area and this trend line and even our 200 EMA, that is when I became bearish on the Bitcoin. So since then, I've been bearish on the Bitcoin. So whatever we are seeing, whatever activities we are seeing, is just a pullback on. It's just a pullback. The higher time frame is still bearish for the Bitcoin. As we can see, after this break below this support, the market came back to use that support area as a resistance area. From there, the market dropped. After the market did this drop, everything we've been seeing in the past 2 months is a pullback. That is why I told us that I'm still bearish on the Bitcoin. Everything that's been happening in the Bitcoin, I consider it as a pullback. So this is clear for us. The current direction for the Bitcoin is bearish. The area of least resistance is to the downside. Let me zoom out. We can see this impulse leg that happened from here. There's one that happened from here to here. One happened from here to here. The market came down from here to this place, did this pullback to this area, and from this area, it came down again to this place, and since then it has been pulling back. So I've been waiting for it to come to this resistance area. From there, I want to go, I want to short the Bitcoin. So let's go back to the 4-hour time frame. On the daily time frame, I've been able to, make it clear to you guys why I think that the BTC USD is in a downtrend. So we've seen the breakout on this trend line, break below this support area, pull back, market changing its character and coming down. Whatever we've been seeing in the past 2 months is a pullback for this, bearish move to continue. This is the daily time frame. Now let me remove all this, so we'll go to the 4-hour time frame. So now on the 4-hour time frame, we can see that area, and like I always tell us, I also like to confirm this resistance area with my Fibonacci. If I take my Fibonacci from this leg to this point, from this leg to this point, I can see that the market is at 61.8 Fibonacci area. So I think that from this level now, the sellers will come in to take this price down, just like what they did here. We'll be seeing them doing it here. So that's what I'm expecting. So this is the 4-hour time frame. This is that resistance area on the daily time frame. The market is there. So I'm expecting that this move that happened here from this point to this point, I'm expecting a similar thing to come and happen from this point. Let me use the trend line from here to here. Expecting a similar thing to occur from here to here. So we're expecting a Bitcoin to eventually drop from here. So this is an ABC move, A to B, C and D. So yeah, in the coming days now we'll be able to identify, to establish the fact that there's tendency that the Bitcoin is going to start dropping from this resistance area. Now, how do we participate in this market in the coming days? So in the coming days, I look at this area as my potential supply area. This area is a potential supply area. Now, even though I can see that it's like the sellers have started to come in, we still have some problem. There's a problem at this support area. This is the support area that is still preventing this market from dropping. Even though I'm saying that the price got to this level and the market start to pull back, I'm not seeing an active bias here. Nevertheless, the market can continue shopping and just move up, but I'm not seeing an active bias here. But I still think that there's a resistance area at this point. I still think that there's a resistance area at this point. So even though the market has pulled back to an area of value, there are still some key support area that is still disturbing the market from having a full fall. Now, in the coming days, this is what I'll be waiting for the BTC USD. Although I got an entry here which has dropped. My entry is here, my stop loss is here. I'm looking at this market at this point now. In the coming days, if I see a pullback, a break below this level, and a pullback to this level, I will join the sellers here. Already I have a position. I'll add another position at this place to take the Bitcoin down. But even if the market closes below the support area, there's still another key support area below here that might give this market an headache, and that is this area here. So ultimately for the Bitcoin, there are two more areas that I'm waiting for. If the market clears this first support, then come back and clear this second support, and the sellers come back, it is from this point, this support area at 75, let's say 76,000. From this support area at 76,000, if price eventually breaks below this support area at 76,000, we'll be seeing the Bitcoin going all the way down to around 45,000. And I think it will even go below, let's just say around 45,000, but me, I'm looking at going out around 50,000. I'm looking at going out around 50,000. So, but before then, where the Bitcoin is now, if I see a close below this support area and they pull back and the sellers come in, I'll join them. But also be wary of this support area below here. But if the market eventually closes below this support area and pulls back, that is when, if you enter this Bitcoin from here, you need to hold the market. Hold it, because trades like this do not always come. They come once in a while. So for the Bitcoin, in the coming days, I'm waiting for the price to close below support area at 79,386, pull back, and when the sellers come in, I will join them to take this price down. But be wary of this support area at 76,000. But if price eventually succeed in closing below this support area at 76,000, and you get a pullback and the sellers come back in, if you take this trade, if you sell this Bitcoin from there, you have to hold this market all the way down. So 2 points of entry for the Bitcoin in the coming days are this support area at 79,420 or 75, let's say 76,000. Note, I will not be buying the Bitcoin unless I see a clear break above this area. I will not be buying the Bitcoin unless I see a clear break above this resistance area at 82,802. If the price, only if the price closes above this area, breaks above this area, that is when I'll be looking for buy for the Bitcoin. Then I'll wait for the market to pull back to this support. Then I'll wait for the buyers to come in and I will join them, take the price back up. I repeat, in the coming days, if the Bitcoin did not close above this resistance area at 82,802, I will not be buying it. I will not be looking for buy. It has to close above this area, pull back, then I wait for the buyers to come in around this area and I will join them. So in the coming days, if the market closes above this resistance area, I will not be interested. So I'll just allow it to do its thing. Maybe in the following week, I will see how far it has gone, then I'll wait for pullback. So, but in the coming days, I'm still looking to short the Bitcoin. If I see a close below this area and a pullback, I will sell. At this point is the main support area. If the Bitcoin closes below the support area, then officially the Bitcoin will be dropping down to maybe around 45,000. So guys, that is for the Bitcoin. Let's move to the next pair, which is the Euro USD. So for the Euro USD, the trade plan for the Euro USD, as at last week, it's still the same. But let's just do a recap again. So I can see that the Euro USD left this supply area and came down to this demand area, which means that the market is in a range. It left this supply area, it came back to this demand area. And like I told us, when the market is ranging, once it has left the supply area, it's coming to the demand area. Once it has left the demand area, it's going back to the supply area. The market moves, demand and supply. That is what moves the market. Demand and supply is what moves the market. So now that the market has left this demand area, it's coming back to this supply area. Whatever that is doing here is eventually coming back here. So when it left this supply area, it came to this demand area. We saw a build up, and the market break above. Now the market is building back up. The market is building back up because there's a strong resistance area at this point. Now, how do we intend to trade the Euro USD in the coming days? So the Euro USD, I'm still bullish for the Euro USD. So I'll be waiting for it to come down to this support area. I think that this support area is where the market is coming down to. This is the support area where the buyers have an upper hand. That is why I call it and there's a word I normally use for stronghold. I call it the stronghold of the buyers. This support area is the stronghold of the buyers. This is the demand area. I like to call it the line of departure. This is the demand area, the line of departure, and this is the stronghold of the buyers. This is their first stronghold, where if the sellers come in, the buyers are going to come in aggressively. This is the stronghold of the buyers, and the big boys like to execute from these key areas. So for the Euro USD, I'll be waiting for the market to pull back to this support area. The market went up, started coming down, supposed to get here, but from here it started going back up. Like what I always tell us, when the market have identified the level where it wants to move from, it first of all create a fake area. It will engineer a fake support area. It's not as if it's a fake support like that, because when you look back, you still see that this area also have support areas that it has respected in the past. But this is the level where the Euro USD is coming to. But to first of all engineer this support area so that traders can come and place their buy orders here, and their stop loss will be below here, so that when it comes back down, it will take them out before going up. It needs those liquidity, because liquidity is the fuel that drives the market. Just like a car now, without fuel the car cannot move. So for the Euro USD, I will still be waiting for the price to come down to this support area. At this support area, when the buyers come in from this point, I will join them, because I see that you can see it acted as a support here, resistance. Let's take our Fibonacci from this demand area, swing low to this swing high. You can see that this level lined up with our Fibonacci 5061.8. There's Fibonacci traders there, and this build up that we see here, some traders can call it head and shoulder. Some traders can call it head and shoulder. Let us take this. What am I looking for? Okay, let me just use this sign. I can call this the left shoulder, the head, and the right shoulder. Left shoulder, head, and the right shoulder. So at this level, let me put back my demand area. Mistakenly deleted it. So at this level, we have support and resistance traders. We have chart patterns traders that will consider this area as their neckline. We have Fibonacci traders. So there's a lot of confluence here. So this is the area where I want to participate. Whatever that is happening here, as far as the buy is concerned, it's not my business. I'm not interested. So for the Euro USD, I'm waiting for price to pull back to this zone. Anywhere from this place in between this zone, I see my buyers coming. I will join them. Then I will take this price back to the supply area. It's a swing trade. When you get this entry here, you have to swing it down here. You hold it to this point here. But there's another thing again I told us. Now, at this area, there's a resistance area here. There's a resistance area here. There's a resistance area here. From this resistance area, you see, that there's a resistance here. Also look left. Resistance, resistance, resistance. So there's another range here again. Even though we are having this range here, there's another range here again. Let me make it clear. Come back. Let me even bring it closer. There's a range here. Now, let me remove this first. Now, there's another range here now. I know how the market moves. It moves when the market is in a range. It moves from zone to zone. It got to this supply area. It came back to this demand area. It has left this demand area. It's going back to the supply area. When it gets to this supply area, it's coming back to this demand area. Now, and this level you are seeing here is not just this supply that is there. If you check the past, you see that this level has been a great level. Even if we go to the daily time frame, this is that level. Acted as a resistance here. Resistance, resistance. So it's not just the forward traders seeing that level. It's a very important area for the daily time frame traders, or the higher, for the big boys. So in the coming days, I'll be expecting, you can see that the Euro USD have already started to rise. I'll be expecting the Euro USD to rise to this back to this area. Then if the sellers come back, I'll join them from here. Now, when the Euro USD start to drop here, it will come and take out all these people selling the market here. See, there are people, all these people buying the market. There are traders who are buying here. They have that stop loss here. Some are buying here, stop loss here, stop loss here. When the market is coming down from here now, it will come and take all. It will get here. In fact, there are also some buying from here. When the market starts to come down, some entered here on Friday. They have their stop loss here. Some have their stop loss here. You see, all these places are filled with stop losses. There are stop loss here, stop loss here, stop loss here. So when the market start coming down, as it's taking out those stop losses will be acting as fuel for the market. As it's taking there, to be acting as fuel. You see the market dropping, acting as fuel, until the market will get to this area. Then from here, you now see the selling pressure now get weak. Then the buyers will now step in from here. This is where the big boys are going to buy the Euro USD from this zone. From this zone, they'll buy this market. Then when they buy this market, all those people who sold this market down here, their entry will now become another fuel to take the market back up. It's crazy. It's crazy. All the people who sold this market from here, their entry, as the market will start to go up, it will start to take them out. It will take them out. That's how the market will rise back to this supply area. So, having said this now, This is what I'll be looking at for the Euro USD in the coming days. Let me remove this level that is here. In the coming days, I'll be waiting for the Euro USD to pull back to this resistance area. From there, if the sellers come in, I'll join them and I'll take the price down here. And when the price gets to this support area, I'll wait for the buyers to come in. Then I'll join them and take the price back up. So if the price come here now, from here now we'll have another big head and shoulder, another massive head and shoulder. Where is this shape? Okay, this is the shape I'm looking for. From here now we'll have a head and shoulder here. We'll have a massive head and shoulder here. We'll now have a massive head and shoulder here. Left shoulder, head and right shoulder. From here, the market will push to the upside here. Massive. So for the Euro USD in the coming days, we'll be looking at two scenarios. Price rising back to this supply area. Price rising back to this resistance area. Sellers coming, we'll join them and take this price back down. At this level, we'll exit our sell, wait for the buyers to come in, then we'll join them from here and take the Euro USD back up here. So let's move to the next pair. we'll be looking at three pairs today. The next one we'll be looking at is the Nasdaq. So the Nasdaq is very clear for us. As I told us, once I've identified the direction of the market, I wait for the market to pull back to for the Nasdaq, the market is bullish. I'm waiting for it to pull back to a support area. From there, I wait for the buyers to come and I join them. For the Nasdaq, now I don't need to start going to the daily time frame or the weekly time frame to see what the daily time frame or the weekly time frame is saying. The 4-hour time frame is already clear. So once the 4-hour time frame direction is clear for me, there's no need me going to the daily or the weekly time frame. It's clear, there's no point. Don't confuse yourself. The market is already complicated. As simple as you can make this be, the better for you. Do you understand? So I can see the Nasdaq is bullish. So what I was just waiting for the Nasdaq, and this will take time to happen. I don't know when that will be happening, but whenever it decides to happen, we'll wait. Let me look at this leg here. This leg here. So for the Nasdaq, I'm waiting for price to pull back to this zone. This will take time to happen. I don't know when this will happen, but even if it happens in 3 months time, we'll wait for the market to pull back to this area. Then I'll join the market for here. The market did not pull back to this area. I'm not interested. So if I take my Fibonacci, let me take from this leg to this point. I can see that my Fibonacci, this place lines up with my Fibonacci 5061.8. If I even decide to take it from this leg here, this is a strong, leg to demand area, push the price up. You can see that this area lined up with my 61.8. If I even decide to take it from this point, I can see that I have my 50 here. 8.2 is here. So I will just take this one here. This one here is a sweet spot for me in this zone. I prefer this one because when you see this is a strong leg, and if you look back, you can see that, see that I almost lined up with this leg here and this leg here. So this leg and this leg. So if I decide to take this one here, you can see that this one also lined up. My 61.8 is here. If I look back, you can see that this area lined up with this place. So all this is just to it's just to confirm that this support area is a good support area. We'll have support and resistance stay down in the Fibonacci area. Guys, Fibonacci is very, very important because it's a psychological number. Now, like I told us, after so many years of trying different patterns, different strategies and the rest, I come to ask myself that what exactly is trading? What exactly is trading? I discovered that trading is nothing more than a person identifying a product that is in demand, meaning a product that people need, people want to get their hands on, and finding out how much are people willing to buy this product. Once I know those two things, then I find out how can I get this product at a cheaper price. So now, and once I get that product at a cheaper price, I sell back to those people who need it. I don't need the product. I don't know what they want to do with it. My own is just to, I see they need it. I see they are willing to pay this amount. I get it at a cheaper price and I sell for them. So now the Nasdaq now fulfill that condition. Now, we can see that this market for the reason I don't know, it started going up, started rising. With this now, I can see that people really need to buy this stock. Why did they want to buy it? I don't know. I just know they need to, but they want it. It's going up. So, seeing that, I can see that they are willing to pay up to 29,190 for this product. Okay, so now how do I get my hands on this product at a cheaper price? Why I love to use the Fibonacci is because imagine you needing to buy, let's say you need to buy an iPhone, for example, and they tell you that the iPhone is being sold for $1,000, and all of a sudden you see a store or someone who is willing to sell you that iPhone for a 50% off the actual price. That is, the person is willing to sell that iPhone for you for $500. You are going to, even if you don't have money, you borrow money to buy. And that is what these stores are doing all this, their Black Friday deals. They do Black Friday deals during the Novembers, and you see even product that people did not need, they buy it because they say 50% discount and the rest. So once people hear 50% discount on an item, they begin to buy even things they don't need. So that is why the Fibonacci 5061.8 area is very, very important. That is why for me, once I've identified that support area, I want it to line up with Fibonacci 5061.8. What it does, I wait for the price to come to that area. If it doesn't come to that area, I'm not interested. Let it come there. If it comes there, I know that at this place, there are a lot of, it's people who are willing to buy that product for me. The buyers will step in, the big boys will step in, and if I buy from there, there's high chances that the market will move from there. So that is why, the Fibonacci is very, very, important for me. So I'll be stopping here for today. So let's just do a recap so that we can outline our trade plan. So for the BTC USD, I'm waiting for price to pull back to this area at 79,386. When the price pull back to this area at 79,386, if my sellers come in, I'll join them. My stop loss can be, above this area, or maybe it can be here at 87.59. And if you are selling this market one here, be careful of this support area at 76,000. Any trade I enter on Bitcoin, I'm holding. I'll just be watching this level. Once the price breaks below here, now if I get an entry here, I'll be watching this level. This is the level that will break the camel's back. Once the market succeeds in breaking below this level, I'm holding down to this area. Like seriously, if the Bitcoin closes below this support area, if I get an entry, I'm holding down to this area at 40 something thousand for the Bitcoin. But any entry I take now, I'll be watching. The first is for it to break below this support area. Once it breaks below this support area, the next support I'll be watching is this support at 76,000. Once the price succeeds in breaking below this support area at 76,000, the Bitcoin is done. Is done. It's going to crash to 45,000. So I'll be paying attention to this level. If the price gets to this level and fails to close below, and I see the buyer step in strongly, I will exit my position. If it gets to this support area at 76,000 and fails to close below, and the buyer is coming strongly, I will exit my position. But if it gets to this 76,000 and close below it, then I'm holding my Bitcoin down to 45,000. So guys, that is it for the Bitcoin. Let's move to the Euro USD. So for the Euro USD, first I'll be looking to sell the Euro USD from this area. I can see the buyers coming in here. If they rise to this area, so between this area, between 1.0 18234 to 1.18481. That will be my entry. Then stop loss can be above here 1.18580. Then TP will be here 1.16281. Then once you get the sell entry here, you take the price down here, and at this point you'll be waiting when the buyers come in. So the buy entry will be around this zone at between 1.16263 to 1.1573. For anywhere in this zone the buyers come in, you join them. Stop loss can be below here at 1.15507. Then once you take this buy from here, you hold this Euro USD back to this supply area at 1.20830. Moving to this up won't be an easy journey. When the price gets to this resistance area, you have to be careful, because for it to get here, it has to break above this area. So when it gets here, you'll be watching. If you face to close above and the sellers coming strong, don't forget there's a level here at the back. Remember the chart pattern traders. This one now is another. This one is an head and shoulder for them. This down one is the inverse head and shoulder. This up one is the head and shoulder for them. Left shoulder, head, right shoulder. Guys, so once you are trading, you must pay attention to all these people. You must pay attention to them, because you must pay attention to them. So there's an inverse head and shoulder here. There's an head and shoulder here. So why, if this market leave this down, once you get this buy from me, at this point you need to be watching. If possible, if you can close some of your profit and move your stop loss to break even, and be watching. If the market breaks above, you can still get another position from here that you take to the supply area. But if you don't want headache for yourself, the market gets here, can just exit here, because all this swing trade, is not something you just start trading today. You want to swing, a trade. You mature into it. You mature into it. If not, you end up losing whatever you've made on the market, and you see yourself in profit. The next day, you see yourself in loss. So you have to be careful when the markets get to this resistance area. If possible, you close your position. But for me, if I take this buy entry here, I'm holding to this supply area. The market gets here, and I see the behavior of the buyers, that they become weak and the sellers come in strongly from here. I will exit my buy. But if the sellers do not come in strongly from here and the buyers are still strong at this point, I will hold to this point. So let's move to the next one, which is the Nasdaq. Nasdaq is very simple. So we're waiting for the price to pull back. Entry will be between this zone at 26,529, between 26,529 to 25,837. Anywhere in between this zone, I see the buyers coming. I will join them. Stop loss can be below here as 25,752, and if I get that enter, I will just rise the price back to this area. I will hold, because I can see nothing on the Nasdaq again. So even while the market is getting to this place, you have to be careful. At any point, if the sellers come in, you exit. But of what we know, if the market is supposed to come and supposed to break structure and create a higher high, if it doesn't create a higher, at least it creates an equal high, then maybe from this area the sellers will come back. So I'm not seeing any level. I think this is the how would they put it, this is the highest point the Nasdaq I've gotten to. I don't know, but what I can see of my 4-hour time frame chart, this is the highest point the Nasdaq I've gotten to. So I will just exit at this point. Yeah, if it gets there, I'll just exit. So entry will be at this point, between this zone, anywhere between 26,517 to 25,849. Stop loss can be below here at 25,752. Then your TP back to this high at 29,228. So guys, I usually use these zones because this area are not specific areas. If I take this, if I say let me take a line now, for instance, now you take a line now, the market can get here and go down. I say, okay, let me take this price here. So that's why I like to just take it as a zone. So in between this zone, anywhere in between this zone, I see the buyers become weak, and the market and the sellers become weak, and the buyers come in. Anywhere in between this zone, I will join them and take. They might even sometimes say they might even come and drag it down a little and take out, liquidate more traders, more early buyers, and from there, when you see the buyers come, you join them, you take it up. So guys, thank you for watching. Until I see you next week, thank you and God bless you.